Hello, my name is Evan, and welcome to Evanomics 101, your number one source for everything economics. Imagine this: your mortgage, your loans, even your savings, all getting more expensive or more valuable overnight. Why would this happen? Interest rates. Right now, central banks around the world are adjusting their interest rates, and that changes everything about the economy. In today's video, we're going to break down what interest rates really are, how they relate to monetary policy, why the Fed's decision could affect more money today. But before we jump into the video, I have a quick favor that really helps grow the channel. If you enjoy content like this, please hit the like button, share this with someone who needs it, and subscribe so you don't miss out on what's coming next. I got a lot more content that can help people understand economics a little bit better. So subscribe and make sure that you really stay ahead. All right, let's get into it. So, what are really interest rates? First, let's define interest rates. Simply put, an interest rate is the cost of borrowing money. The cost of money. Okay, you borrow money, you pay interest. You save money, you earn interest. It's really simple. Central banks like the Federal Reserve use interest rates as a tool to control the economy. Interest rates are like the economy's speed control. High rates slow things down. Low rates speed things up. Okay? It's real simple. And the Fed uses them to keep the economy balanced. All right? So, how do interest rates relate to monetary policy? Now, here's the key connection with monetary policy. Monetary policy is how central banks control the economy using interest rates and money supply. Tight monetary policy, high interest rates, slow growth, low inflation; loose monetary policy, low interest rates, faster growth, high inflation. Basically, the Fed adjusts rates to either cool down or to pump things up, stimulate the economy. Um, Quick pause. If you want more breakdowns like this that help you understand economics, please hit the like button, share this with someone who into this kind of stuff, and subscribe. Most people don't really learn this, so if you do, you're already ahead of the curve. Let's hop back into things. Um, why the Fed cares about inflation? Inflation is like a hidden enemy of your money. When prices rise too fast, your savings buy less, loans feel heavier, businesses face uncertainty. So the Fed raises interest rates to make borrowing a little more expensive, to kind of slow things down and reduce inflation. Um, they lower rates, they do the opposite of that. All right, they encourage spending, they stimulate growth, they increase the risk of inflation, more inflation. This push and pull is the biggest part of monetary policy. All right. So how do interest rates um, affect you and me? All right. Interest rates basically impact everything, especially in the world that we're living in right now. Housing market, higher mortgage rates, fewer buyers, slower home sales. Stock market, higher rates, higher borrowing costs, lower company profits, stock volatility. Jobs, slower growth. Your savings, higher interest rates means higher rate of return on bonds, CDs. So even if you don't follow the effect, it still affects you on a daily basis. What kind of things do you need to be watching for? If you want to be prepared, watch Fed announcements and meeting schedules, track inflation numbers, notice how banks adjust their rates, look at consumer spending trends. These signals help you understand what the economy is about to do and how it affects your money. Okay. Um, so the big takeaway from everything is interest rates are more than just numbers. They're a they're a lever between that controls the economy in a sense. If you look at it like that, it affects your money and shapes the financial decisions of our economy. All right, understanding interest rates and monetary policy gives you um, an understanding of how to save your money a little bit better, how to invest a little bit better, protecting yourself during times of inflations and things like that. So if you found this video helpful, make sure to like, subscribe, drop a comment. Um, and always, this is Evanomics, your number one source for everything econ. Please check out some of my previous viewed uh, videos. And as always, I have more videos coming. I'll see you next time. Thank you.